The biggest SpaceX insider didn't sell the IPO, he bought another $1 billion of it. And that single data point matters more than the entire first-week price chart. Let me explain why. So here's what happened. SpaceX listed on Nasdaq on June 12th under the ticker SPCX. It priced at $135 a share, opened at $150, closed day one around $161. That's a 19% pop on the largest IPO in Wall Street history. By Monday, it was around $192.50, and as of early this week, it was trading near $206. That's roughly 50% above the IPO price in 4 trading days. Now, we've done videos on this channel being skeptical of this exact moment. I did a whole video called SpaceX IPO, Why Retail Will FOMO and Smart Money Already Left. The thesis was simple. Insiders would use the public listing as an exit. Retail would be the bag holders. Classic IPO playbook. And I was wrong, or at least the framing was incomplete, because the single most informed long-term holder of SpaceX stock did the opposite of what that thesis predicted. Ron Barron, founder of Barron Capital, has been in SpaceX since 2017. He got in around a $20 to $22 billion valuation. His position is now worth about $25 billion. That's roughly a 1,312% return. And when the IPO hit, he didn't trim. He bought another $1 billion worth specifically to maintain his ownership percentage and avoid dilution. That is a different signal than a price chart going up. Barron went on CNBC's Squawk Box and said, quote, "I think we're going to make hundreds of billions of dollars. What they've done isn't possible for anyone else to accomplish. Not possible. He's at least 10 years ahead of everyone else." He's projecting SpaceX could be worth $30 trillion by 2040. That's his forward estimate, not a current valuation. Just to be clear, that is one man's number for 14 years from now. Jim Cramer said investors can't stop buying SPCX. Solving the money problem covered Barron's conviction and called the launch what it was, a win. And for once, all of them are pointing at the same thing, and the tape agrees. If you've been following SpaceX through the noise, through the skeptics, through the retail as exit liquidity framing, this week the chart agreed with you. That's worth saying plainly. But. And you knew there was a but. Let's be honest about what we're actually looking at. The public float on SPCX is thin. Most shares are still locked up with insiders and employees. When you have a small float and massive demand, the price action gets exaggerated. That 50% pop is real, but it's happening on a fraction of the total shares outstanding. Lockup expirations are still ahead. When those shares unlock and insiders who aren't Ron Barron decide to take some profit, supply increases. That's just mechanics. Not bearish, just true. And then there's the fundamental scrutiny that comes with being public. As a private company, SpaceX could operate in a kind of informational fog. Starlink subscriber acquisition costs, Raptor 3 production economics, the actual unit economics of launch contracts. Those were knowable to insiders but not to the market. Now they'll have to report, quarterly, to analysts who will build models and pick those models apart. This is the part nobody's talking about yet. The IPO pop is the easy story. The hard story is whether the fundamentals hold up under public company scrutiny over the next 2 to 4 quarters. Mars timelines, Starship reusability targets, Starlink's path to profitability at scale. All of that gets examined now in a way it never was before. Here's where I land on this. A 50% move in 4 days is not a valuation signal. It's a demand signal on a constrained float. The actual valuation signal is an insider with a 1,312% gain, choosing to add $1 billion instead of selling a single share. When the best-informed long-term holder in the building increases his position at the IPO price, that tells you something the chart can't. It doesn't mean the stock goes up from here. It doesn't mean the bears are wrong about everything. It means the smart money is cashing out narrative, which I contributed to, was at best incomplete. That's worth owning. The real test is the next 2 earnings cycles. That's when we find out if this is a company that justifies its valuation with numbers, or if it's still running on narrative. I genuinely don't know which one it'll be. But for the first time, we'll actually get to see the math. Drop a comment. Did you get into SPCX, or are you waiting for the lockup expiry? I actually want to know. And if you missed my earlier skeptical take, I covered the bear case in SpaceX IPO, why retail will FOMO and smart money already left. Link in the description. Interesting to watch that one back now. If this kind of second-order thinking is useful, subscribe. More of this coming. And speaking of things falling from the sky and getting misidentified, a fireball lit up the night sky across 15 U.S. states on Sunday night. Beautiful, dramatic. And within minutes, half of X was convinced it was a Starlink satellite crashing back to Earth. It wasn't. NASA confirmed it was just a meteor. But now that SpaceX is a public company with roughly 7,500 satellites in orbit, every bright streak across the sky is going to get blamed on Elon until proven otherwise. That's the new normal. All right, if this kind of second-order thinking is useful to you, stick around. More coming. Later.